All right, folks, forget the lefty rabble-babble. The Trumpian economy is booming, and that's the subject of the riff. For all that left-wing media rabble-babble about the Trumpian economy, a.k.a. the great American economy, nearly all the numbers coming in this spring are showing strength and resilience. Yes, there is a war going on. Yes, gasoline and other energy prices have jumped up because of the war. But it's very hard to find negative consequences from the Iran energy war shock. And of course, that's all the lefty media ever writes about. But the lefties are going to be very disappointed. There is no recession in sight. In fact, the Atlanta Fed GDP now is predicting 3.7% annual growth in the second quarter. In today's jobs numbers, yet another example of a strong economy, beating expectations by about twice as much. Private sector payrolls up 123,000. That follows last month's big gain of 190,000. Those are big numbers. The unemployment rate is still 4.3%. That's virtually a full employment number. We don't need hundreds of thousands of jobs each month anymore because the borders are closed. And the so-called break-even rate of job growth could even be something near zero. In fact, a good 3 million illegal immigrants have left the U.S. either through self-deportation or criminal deportation. Anyway, while President Trump has reduced the federal workforce by 345,000, the private workforce has moved ahead by nearly that much in just the last 2 months. Meanwhile, weekly unemployment claims are continuing at rock bottom. And interestingly, it's the non-supervisory production workers who have done the best over the past year. Their hourly earnings have increased 3.7%, while their hours worked have jumped 1%. Now, what economists call the wage income proxy, which adds earnings to hours worked, so that's now showing a 4.7% increase, okay? The blue-collar folks are doing better than the white-collar folks. And the 4.7 total wage income gain is still way better than the roughly 3% inflation rate favored by the Federal Reserve, and even much more ahead of the 2.7% median CPI from the Cleveland Fed or the 2.4% trimmed mean from the Dallas Fed. Look, nobody's thrilled about the energy shock, including me, but I still believe it will be temporary, and I still believe it's a very small price to pay for the gruesome and barbaric Iranian regime, probably the worst government we've seen since the Nazis of 100 years ago, to get rid of all of them. Anyway, the ISM services and manufacturing indexes are strong. Non-farm productivity over the past year is up a fantastic 2.9%. And unit labor costs are up only 1.2%, which may be the best underlying inflation measure of all. That, in turn, feeds into the best profits performance for American business in at least 20 years. And remember, profits are the mother's milk of stocks. So, not surprisingly, we have record-breaking stock markets. You know, in Trumpian America, very interesting, both workforce labor and investment capital are both doing very well. You know what? That's what you get from tax cuts, deregulation, and drill, baby, drill, and reciprocal fair trade. All of it. And that's the riff. All right.